I am mining investor and editor of Resource Stock Digest, Gerardo Del Real, here with my partner, Mr. Nick Hodge, who's also an investor and the publisher of Daily Profit Cycle. This is the 234th episode of our weekly therapy session that we like to call Investing in Bizarro World. We're going to talk markets, we're going to talk uranium, we're going to talk gold, we're going to talk about what we're investing in, a couple of disappointments out there, a lot of great stuff going into September. It's conference season. My Cubs are 3 games out of first place. Life is good. Mr. Hodge, before we get into all of that, how goes you, sir?
And I saw that the Cubs were making a comeback. I'm forced to follow the Mariners here because that's the local team. They were in first place for a couple of days after coming from several games back, but I think they're not in first place anymore either. It's a good week. I had an IPO from a private company I'd been holding for 2 years or so. So that's always good when you get that monetization and conversion event where it's no longer dead money, but is listed and the market can start valuing it properly, and had a takeout on the speculative side of things when I woke up this morning. So those are always nice press releases to wake up to. So good week. How are you?
That's awesome. I'm fantastic. Again, I couldn't be happier with the way the Cubs are playing. We have a wild card spot in the playoffs. We're 3 games out of first place in the division. We look great all the way around defensively, pitching wise. We called some young kids up from AAA that are going to come up and lend a hand for the stretch here in August and September. So no, things are going well on the personal front. Things are going great on the business front. Really excited. I've said it all summer. For post-Labor Day in September, I think there's going to be a flurry of activity. And let's get right into it. You talked about the company that finally listed after, holding it for a couple of years. And I thought, that presents a really good opportunity to talk about private placements and why, although sometimes, and you and I are both, benefactors and victims of this because we're sitting on a lot of private deals that have taken a lot longer to go public than we wanted to. But the upside to doing that can be pretty lucrative, and patience really can be rewarded in a very profitable way. And so I don't want to get into the name if you don't want to get into the name, but I would love to get into the situation and the specific price points and the gains that you've made on 2 days of trading essentially thus far after holding it for 2 years. Because I think you were kind enough to let a buddy of mine in on that placement. I should have written a check. That sector isn't my specialty, so I did not. But congrats to you. Can you speak to the process and what the hold times are like sometimes when it takes a little bit longer, and why those are often worth it when the company executes?
It's not my specialty either, Gerardo. I'm just a generalist, blind squirrel stumbling into nuts over here. And it had a good share structure and good properties and people that I was familiar and comfortable with. So sometimes that trumps the commodity and the asset. I mean, they all get scores, of course. They all get weighed into the decision, but the share structure and the people and the stage at which the deal is in is very important. So it's an oil deal. It's a Canadian oil deal looking to exploit some assets via multilateral drilling, where you go down a couple of 100 meters and then you can bore out horizontally with in several different directions. And there's been some success in various Canadian oil patches over the past couple of years with that technique. And as oil has been relatively strong, in COVID and since, running to 100 and pulling back to 60 some, and now going back up to 85. So a good environment for the energy, oil plays, etc. So. Anyway, it's a private deal. We financed first at 10 cents. It was early in 2022 with no warrant. And then they did another round at 25 cents. And that came with a half warrant at 50 cents for 5 years. So we got the 5-year clip there. And that was a couple of months ago ahead of their current listing, which happened via, going into a capital pool company. They had their qualifying transaction, which was, merging with this oil company. So listed this week, and it's been, just over 30 cents on pretty good volume. And that's with that 10 cent and 25 cent paper being free trading. So a 3-bagger right out of the gate. And obviously that's, good to have multiples of your money. But it's nice to see, that liquidity available too. I keep spreadsheets, obviously. I, track these investments, and look at them, and we have you as well, but me too, and members of Hodge Family Office Private Intel. I've gone into a couple of deals in the past few years that haven't gone public for whatever reason, but mostly, market conditions. We don't think the market's right. We're going to wait or whatever. And they start to add up when you can't access that money, right? Especially if, part of your system or your process is turning over previous deals, selling shares, taking gains off the table or whatever to then reinvest into new deal flow as it comes across your desk. And it becomes a kink in the chain when some of those deals, stay private for longer than you had expected, and you can't access that capital, right? So good that it came public, and it comes public at a decent time. Like I said, with oil back at 80 or $85, and I did plan on talking about this company, and we can say the name. It's fine. It's good. Resolute Resources, it's called. And it'll be drilling here at the end of September, and should have results out in late October or early November. And I saw you had oil on the sheet as well. It's a weird time. Like, oil is bullish, and it remains so. And I have this play, and I told you, I think last week or the week before, that I had recommended oil stocks in foundational profits. And at the same time, growth continues to slow. They revised Q2 GDP down to, I think, 2.1%, I think it was. And so things remain sort of at odds with each other as far as oil being bullish with sluggish growth. But I don't make the rules, and it seems like it's a good time to be in an oil stock. So I look forward to those results.
I'm looking forward to that as well. You touched on energy and you touched on oil. I think it's a good opportunity to talk about China briefly. We talked a few weeks ago, and I mentioned how, yes, there likely obviously has been weakness in the Chinese economy over the past several quarters. Mainstream media is just finally starting to kind of call that out, and they're looking ahead as if the worst is yet to come. I'm looking at it as if the worst has already happened, and the reason being what I tried to articulate a couple of weeks ago on the podcast, that being that China is just so much more nimble than we are, right? And we're already seeing, and I'm writing about this in the next issue of Junior Resource Monthly, so I won't get into too many details, but we're already seeing what the playbook is going to be. And that playbook is going to be the Chinese government doing what it always does, which is getting as creative as it can to stimulate its economy. And they can do that in a number of ways that, other governments just don't have the capacity or the bandwidth to be able to do. Number of options, they're firing from multiple angles. I don't think it's a coincidence that both copper and oil have perked up here over the last week and a half or so, once China started kind of telegraphing to the market that it is going to take an aggressive stance to stimulate their economy. They cut rates. That was a surprise. They've showed a willingness to continue to cut rates despite the fact that the U.S. is raising rates, which again presents an interesting conundrum, and no coincidence that capital is flowing outside of China and flowing into the U.S., and that dollar is catching a bid, which is why it's pushing up against that 104 level again. So a lot there, but I would caution those China bears that believe the worst is yet to come to, at the very least, dig, as I am, into the numbers and what they can do with their real estate sector, how they can incentivize, a lot of the vehicle purchases that they're looking to transition into, specifically electric vehicles. Also, not a coincidence, I don't think that the lithium price looks to be bottoming here at these levels, as you discussed last week. So a lot there. Anyhow, your take on oil and copper and the price performance, despite bearish, supposedly, news from China and, an economy here in the U.S. that isn't all honky-dory by any means.
Yeah, it's tough. I think that's a pretty good short-term analysis, and you're right. There's a lot there. And for the record, I have no position in China. I tried to buy it on the reopening, on the rebound that everybody thought was going to be strong, and then wasn't, and sold out. And so I'm sort of just watching right now. What I want to say. Yes, I think that they can stimulate. Yes, I think that's why copper is, drifting back up to 480 something, wherever it is. 380 something, not 480 something. But I think that that's a shorter term view. I say that because I think that we've had positive GDP growth here in the U.S. for the past couple of quarters, which means we're not getting a recession this year. I think Q3 is also going to be positive, the quarter that we're in now. And so that really means we're not getting a recession this year because you need 2 negative quarters. So that pushes us out to Q1 at the earliest. And I think that growth in the U.S. is going to tick up in this quarter. So I think that's what's giving a bit of a tailwind to oil and also simultaneously copper. But then I think that, and that's why I think that what you're saying is good short-term analysis. But I think past that into Q4 and Q1, you really do get that slowdown in the U.S., which the yield curve says is still coming, and which we're starting to see a tiny bit of in the jobs market. We'll learn this week when non-farm payrolls come out. But and then the last thing I'd say is sort of separate from everything I just said is that, I've seen this movie before with China, right? China's Lehman moment. It was going to collapse. Their growth is done before, 2018 or whatever the year was. And it wasn't. And so I'm trading cautiously for now, and I think I've laid out pretty clearly that I'm more bullish on energy in the short term, and more bullish on copper in the longer term. Once we get past this blip of growth here in Q3, the slowing growth in Q4 and Q1, and then back to, I think, more sustained type of global growth in 2024.
I think that is an excellent analysis on that situation. We got to talk uranium. Kudos to you. You've highlighted it, for the last 3 or 4 weeks. We talked last week at length about the uranium spot price. Just hit I believe, a 14-month high. Looks to be flirting with potentially, a new 16-year high, if it can break that 64, 65 level, but looking really, really good. The equities have bounced back over the past week and a half. We've said repeatedly, with the uranium space, the moves are violent to the upside and to the downside, right? When you get a $10 drop in the spot price, you're going to take a 40 to 50% haircut on your position. But the opposite is true when you pick up a couple of dollars, as we did this week, right? With a lot of the equities up 20, 30%. Thoughts on the uranium space, since you were the one calling for that a couple of weeks ago, and I believe almost a month ago, if I'm not mistaken.
I mean, I would say in the long term, still a lot of upside left to go. In the short term, you might have to digest some of these gains in the uranium spot market I'm talking about. You mentioned 64, 65. There's no real resistance stopping it from going there. But then, it's going to be a violent move, which I, of course, would love to see. Maybe I'm a bit of a beaten dog from the past couple of years, but I would assume you get a consolidation or digestion of this uranium spot price move to $60 a pound, which came rather quickly. Those last couple of dollars were added pretty fast. And so I don't really have a lot to add on the uranium. Like you said, we went through it in depth last week, and I've been writing about it to subscribers. They know what the levels are, and it's certainly bullish. And so the only other thing I'd say is something I said last week, is that the last time uranium prices were this high, the uranium stocks were much higher. And so despite them having a good couple of days here, they could have much more to the upside left to go if they're to reflect the same sort of, whatever ratio or leverage that they reflected in early 2022 when we had this run to near $60 uranium.
Let's talk overall indices. The NASDAQ just suffered its worst month of 2023. I think, it ties in well with your analysis of the overall markets, right? You want to touch on the overall indices a little bit?
Yeah, so you had the dollar rates that strengthened precipitously. You were talking about the dollar earlier, and typically when you get a dollar move like that and a rate move like that, it puts a lid on gold. And And it did to some extent. Gold, we talked about this, went down to the low end of its range in the high 1800s, just below 1900. But what those rising dollars and rising rates really did in August, and they turned around in mid-July and went straight up until like this week, was put a lid on stocks. Every single sector of the S&P was down for the month of August, except for energy, and it put an abrupt halt to the rally that the broader market had been seeing. Even tech stocks, which are now looking to be decent shorts again, only being buoyed really at this point by Apple. And so it's going to be an interesting couple of months, right? Because as I say, we're sort of in this transition period where you don't get a Fed meeting in October. We're pretty sure they're not going to raise rates in September, and so the market isn't trading, Fed induced. It's sort of trading on its own merits, which aren't really good. Like the underpinnings, the fundamentals, as I've been saying for well over a year now. And the reason that the bulls keep pointing to is a strong consumer, right? There was even a headline in Bloomberg this week that said, and credit card debt hits $1 trillion, showing the strength of the consumer, right? And so I think that strength that the consumer has been showing was borrowed. It was put on the credit card, and now those bills are coming due. And as I mentioned in this podcast before, delinquency rates are ticking up, not just on mortgages, but not just on credit cards, but on mortgages as well. And so if the consumer was the one buoying the scant GDP, I should add, the 2% GDP growth that we had, and the third quarter is going to be their last hurrah before payments come due again on student loans, et cetera, that I'm not sure what the next thing is that's going to keep the stock market up, right? Because we know that earnings aren't great. We know that industrials and manufacturing aren't great. We know that business owner sentiment isn't great. And so you've got sort of new housing, and you've got sort of the consumer still standing. And if the consumer goes away, then I think that portends a return to the bear market for the broader indices.
I like it. Spot on again. You want to talk gold technicals again in the face of a higher dollar, a strong dollar, holding up really, really well. It hasn't done much of anything different than what it did last week, but I was impressed last week that it held up as well as it did, right at the 1940 level. Looks beautiful, beautiful technically to me.
I fear I'm a broken record, but
same. What else to say, right?
But I'll spin it a little bit. So I've been saying to buy the dips in gold, right? And the dips in gold are to 1875, just below 1900, and the rips in gold are to 1950 to 1980, something like that. What I did this week was sell some gold, because if you are going to buy the dips, the only way to monetize that is to sell the rips. And I think we might be a bit range bound more than we already are because of this back and forth from the Fed, right? Like I think the inflation is reinflating. We talked about oil at $80 or $85. Like that's going to start to show back up in the CPI, right? Yep. And then Jerome is going to be like, oh no, like we're not letting this like going to get away from us. We're going to hike again in November, and that's why there's scant chance of a rate hike in September, but we're over a 40% chance of a rate hike now in November. And so the gold doesn't like the rate hikes, right? And so I think that we're drifting back up to that higher end of gold's range that we've been talking about now, but it's going to get pushed back down when we start seeing these higher inflation numbers manifesting. And so that's why I took the opportunity to sell some gold. And there's a lot of ways to do that. The way I did it this week was by selling a development company. Remember a couple of months ago, I told you I was buying development companies on the dip. Artemis Gold, for example, we bought it at $4.75. It hasn't done anything but pause construction because of wildfires, and it broke out north of $6.40 this week. because of that rise in gold, right? From gold going from the low end of its range to the high end. So we sold our shares. We're not married to it. They're not going to be in production until second half of 2024. We simply use that cycle in gold, the bouncing from the low end to the high range, to get positioned in Artemis, and then to sell when there was liquidity at the high end of gold range. And so, kudos to myself if I don't say so. Myself, it was actually a similar percentage win to the psilocybin buyout, to the psychedelic stock buyout in much shorter amount of time. And so, selling is contagious, and now I got the selling bug. But really, no, it's just taking the buy the dip and doing the other side of it, which is the harder part to do, is sell.
I agree. And speaking of selling and buying and timing and fires, the way my brain works, James Bay, it's game on in James Bay, right? The fire bans have been lifted, the restrictions have been lifted. The companies that were still on pause, right? Patriot had got back to it a few weeks ago, but there were a couple of other companies in the area that were prevented from getting back to their exploration programs. Those are now active programs once again. The market has responded in kind, and I think the fall and the winter is going to be an exciting one. It'll be interesting to me to see how much exploration, the ones that I'm watching are actually able to execute on. But I'm excited for that. We had a very, very good conversation with Patriot Battery Metals CEO Blair Way in an interview that we did for Resource Stock Digest here this past week. And, there was a lot to digest there. It was another 25 or 30-minute interview. But look, the bottom line is, other than the naked shorts, and I understand that is likely going to persevere as long as it can persevere. But I also understand that it's probably not something that can't be solved. And I'm sure there's discussions being had by many in the space. And the reason I say that is because I've had personal discussions with some of the largest shareholders, right? I mean, without getting into how many shares that I have, there's a group of us, 4 or 5 of us that have, a significant amount of shares that, add up to millions of shares. But there's another group, that has double-digit million shares, the kind that can do 2 things for you. The kind that can really advocate for something like a delisting from the exchange, the one that's allowing the naked shorting, or at the very least turning a blind eye to it. And the other thing that group can do, aligned with other groups that have smaller but significant blocks of shares like ours, is prevent a hostile takeover. And Blair was real keen on and off the record to not comment at all on what, if any, discussions are being had about the delisting, but he didn't deny it, and he didn't say no, right? He just simply, as any responsible CEO, didn't want to get into it, which I respect. The other part of the thing that really encouraged me was he was clear. You're not going to be able to come in and buy the company in a hostile takeover at $20 or at $25. It's not going to happen. And the reason it's not going to happen is because the groups that have the majority block of shares won't allow it. 1, 2, for anyone to establish a position that could facilitate, potentially a hostile takeover, you're talking a good 20 to 25 million shares. And this he said in the interview. And if you're not going to be able to buy those through a financing, which you're not because the company's cashed up, and you're going to have to buy those in the market, well, go look at the average volume and go figure out how much of that is selling, and then figure out what you would do to the share price if you came into the market and slowly but surely tried to get a 20 to 25 million share position to then initiate a hostile takeover. So that was music to my ears. I love that he addressed it. It was a very good technical release. I mean, there's 4 rigs turning, 7 within the next 2 weeks, 10 hopefully within the next couple of months. 100-meter step outs at CV5 on the western side, a rig on the eastern side. CV9 appears to be their favorite target that they're going to have a rig on here in the next couple of weeks as well. And by all indications, by what Blair said publicly, it sounds to me like they're stepping out and hitting it at CV5, which, again, they've drilled 10,000 meters. They have $150 million. He wants 10 rigs by year end. We're going to have 7 within the next couple of weeks. And look, There's a lot of ways to make money in this market. You could be long, you could be short. It's full of surprises out there, folks. I'd rather be on the long side, but hey, everybody's got to show up to the arena, right? That's the new metaphor that gets kicked around. You show up to the arena and you decide how you want to do battle. I'm doing it from the long side. I'm not in a hurry to sell my shares. I'm not in a hurry to sell the bulk of my position. I know what my target is. It's the same target it's always been. Nothing less than 40. And if I have it my way, it'll be north of that. So my advice, to be absolutely clear, and my recommendation, and the major shareholders that I've spoken to, their advice is to delist. What the board thinks about that, what Blair thinks about that, I couldn't tell you. I'm not privy to it, nor will they comment on it, as they shouldn't. But I like the major shareholders' stance, and we'll see. We'll see. I think it's going to be a fun September, October. I'll say that.
Well, I'm firmly in Patriot's court as a shareholder, and one with 3 kids with private school tuition to pay, and so every penny higher makes the tuition at least seem more bearable, because I haven't done a lot of selling either. So let's go Patriot.
Let's go. And again, kudos to the major shareholders, right? Again, we have significant blocks of shares, but not enough to really lean on a position or a stance, right? Enough to articulate one and voice it and at least have it be heard. But it's comforting to me to know that the bigger elbows in Patriot have similar feelings and sentiment. So let's see what happens with that. Should be fun. What are you watching this week, Nick?
Gosh, my kids go back to school is the main thing. We're buying some uniforms and stuff this week. Did some selling this week. I told you about Artemis. We had the psychedelic buyout, which I haven't mentioned, so I'll do so here. We've been in a company called Mindset Pharma since 2021. Really the leader in the junior space, the junior biotech space for psychedelic pharmaceuticals. Was the only one to have a partnership with a major top 10 pharmaceutical company, and that company was called Otsuka. It's a Japanese pharmaceutical company, and they happened to acquire Mindset today for it's like a 15% premium, I think, over the past 2 weeks VWAP, and like a 50% premium over the past 30 or 45 days or something. It was an $80 million deal. We made something like 45%. It's been a tough slug in that space over the past couple of years, because it gets tied in with marijuana, and marijuana has had a really tough row to hoe as it continues to languish in the Senate and Congress, with no movement from the legislative or executive branches on the deregulation or improving of the banking environment. And so shares of Mindset had gone down. They were at 50 or 60 cents and went down all the way down to as low as 16, 17, 18 cents, where we were buying them up and averaging into our position. And I was telling people I was a buyer down there, and I was in the open market, because we never did a placement. Sorry, it's a long answer to what I'm watching.
No, it's what I asked. It's exactly what I asked.
But then, the Japanese firm just decided to buy it out. They must have been making enough progress on the family of drugs that they, licensed, that it just made sense to take them out. And so, fine, one less position in the portfolio. It's an all cash deal, so I don't have to wait for shares, and just done with it. So I've done a bit of selling, I guess was the point I was making. Sold Artemis, sold Mindset because of the acquisition. We'll digest that for a bit. As I said, no Fed rate hike. So just going to take a breather for a second. I've got a September issue to write here, the week of Labor Day, a monthly issue. And so that's normally when the macro side of things comes into focus for me. But for now, keeping these kids in school and getting these kids back to school. And I was going to tell you about the Egyptian-Zambian Plane, if you want to hear about it.
I mean, who wouldn't want to hear about an Egyptian-Zambian Plane, Nick?
It involves fake gold bars, guns, millions of dollars in cash.
I read this.
And and hundreds of bullets. Oh, so you saw it.
Yes, the movie's going to be amazing, but please
right, so
provide the context for
say
those that aren't aware.
It's a fun little story, except probably not for those who are involved. So there's a private plane registered in Egypt, an Egyptian private plane, goes to Zambia, a Zambian airport, with some Zambians and Egyptians on board, and millions of dollars in cash. We don't know how much because the number keeps changing because folks are busy stuffing their pockets with it. So it was like $11 million. Seems like the Egyptians were going to buy gold from the Zambians. I'm not an expert on these things, but the articles I was reading were saying it's officials, high-ranking Egyptian officials, military officials who are unsure that the government is going to be able to sustain itself in Egypt. They fear it's going to collapse, and they want to get their money out of the country. So they've been putting the money on these private planes. One of the theories is that, this plane has done this trip hundreds of times with tens of millions of dollars each time, to use Egyptian currency to buy the gold bars from Zambia, right? Take the gold back to Egypt, bring cash back and do it again. You got it. So this time, for whatever reason, the plane lands. The guy who has bribed, the security at the airport to walk through the airport with gold bars, goes on the plane with his gold bars. They start making their deal, and security forces rush into the plane. And except no one's really arrested. They start bribing the security forces with the cash, right? So, deals are getting made on the plane. And so, a second team of security forces goes in to, stop the bribing of the first one. And so, anyway, that's pretty much kind of where the story ends. That's all the pertinent details, except that at first it was 11 million, and then it was less than that, and then it was even less. So money is definitely disappearing. People are definitely being bribed. The gold bars were fake. That's the last main detail. They were copper and tin and zinc or something like that. And so just a fun little story. Like you say, there'll be a movie be made of. But in a larger sense, made me think that, the lanes people are willing to go to still use gold and cash to secure their way of life, right? And how this does play out in the real world with currency fluctuations and the strength of government and, sentiment and all that sort of stuff. So definitely cash still being smuggled on planes to buy gold, which I'm sure everyone out there knows.
What a world we live in. And man, humans, why are we so predictable, man? It's one day I have my updated copy of The Fourth Turning, and so I am looking forward to digging into that. I am finishing that book that I said I needed to get done, so getting that out of the way diligently, and I can't wait to get into it. I'm supposed to remind all of you to go to dailyprofitcycle.com/subscribe to never miss the updates and market commentary, amongst other things, right? The tons of talented editors, each with their own viewpoint, each that watch different quarters of the market. All of that insight is absolutely free. It's on the house. It's not sponsor paid content. It's just our thoughts on the markets, trends that we see. And then, of course, you can go to digestpublishing.com if you're looking for some of our paid services, and you can go to Resource Stock Digest if you want sponsor-based, sponsor-paid exclusive content with, interviews with some of the best CEOs, brightest CEOs, and some that turn out to not be the best and the brightest, but that maybe have a good story on their hand and, a story worth telling that provides us a shot on goal at maybe making some money. Either way, that site, Resource Stock Digest, is a great vehicle for due diligence, and take the information and do with it what you will. Anything to add to that, Mr. Hodge?
It's always a new deal right around the corner.
Always a new deal right around the corner. That was the old saying in real estate: the deal of the decade comes around every month, right? And so it's how it goes. I got 3 deals in my inbox right now that I'm looking at. So anyhow, I am Gerardo Del Real. It's been a blast as always, along with Mr. Nick Hodge. This was the 234th episode of our weekly therapy session that we like to call Investing in Bizarro World. Have a great September, everyone. I think it's game on in the uranium space. I think it's game on soon in the precious metal space. I think it's game on a little bit thereafter in the copper space. And I think it's game back on with Patriot here in the next couple of weeks. We'll see. Say some words for us, Nick. Send us off.
No, that's it. Have a good month, everyone. See ya.
Hey there, you independent-minded investor. If you like this video, make sure to tell us so by clicking the like button below. Subscribe to our channel so you never miss another one. And share it with everyone you know on social media. You can also click the link in the description below to check out more information-packed videos just like this one. Thanks for watching.